We sent you a note yesterday, Sunday note, called World War III and Spaghetti. Really inspired, if you want, by a couple of trader comments that I got on Friday. The first was a prop trader telling me, I agree with you that we're in World War III, which I was like, wait a second, I never said that. But what I had said in the morning note on Friday was we're likely in year 2 of what could be a 7-year war here. Now, it made me think, of course, yeah, I guess we are in World War III. And then if you think of what we're seeing here, and there's definitely some super weird stuff with UFOs over the US being shot down, but the multipolarity world of China and India and Saudi all effectively dealing with Russia, and then, of course, Europe and the US, most of all, sending arms directly to Ukraine, is the new World War III, effectively. Now, at the same time, I sent a message, having read that and thought about it, I sent a message to a market maker and said, why doesn't the market go down? I thought it would be like in a 1929 or March 2020 type tape here. And he replied quite simply that everybody's bearish, and so the market can't go down. So that was a theme of what we looked at in terms of what's happening with the oil stocks, where we find a very high correlation between most shorted stocks index and oils, which is to say when shorted stocks are rallying, which has been the theme of the market this year, oils tend to underperform. Having said that, we don't find a huge amount of differentiation between the oils. What we've seen as a theme here has actually been companies reporting and then going down. So the oils have been in a tape that essentially has been a buy the rumor, sell the news tape. We think that the oils will actually do well in either scenario, but the better scenario relative would be if we got through the short squeeze that we're seeing in markets, and that would allow the oils to perform better relatively. So this week, there's some stuff that very much fits the buy the rumor, sell the news, which would be Devon, where we're kind of lacking in conviction on what comes out from Devon's results, basically because NGL markets have been so bad. And that's been a theme for us since fall of last year. We were talking about NGLs, and it's just kept playing out. And of course, it implies very negative natural gas markets as well, which has also played out. You also have EQT, the biggest gas producer in the US, reporting, which is a big deal. That'll be Thursday. And then a much-loved stock amongst specialists, Antera, loved for its inventory and for its pipeline access. Again, that's going to be reporting this week. So some interesting stuff there. At the same time, we've got Suncor, which again may well have issues on its results based on very significant crude differentials in Canada in Q4, poor refining performance, we think, and the ongoing quest to find a new CEO, which we thought would be a catalyst if Suncor could pull a rabbit out of the hat with some executive hero to take over, but we haven't seen that move made yet. So there's some interesting companies there, and one of the most interesting companies in terms of reporting of all, PBF, is on Thursday. They always give a great conference call and very instructive in terms of what's going on in oil markets. What's going on in oil markets is actually pretty positive, but with natural gas being so weak. We were encouraged last week by what we said were 4 major bull elements that have emerged. China, obviously, on the demand side, Russia weak on the supply side, Saudi raising oil prices, and of course US jobless numbers being low, all represent a bullish outlook for oil. So that's that, and have a great week.